Welcome back to another episode of the After Aston I podcast. I'm Katrina, I'm joined by Jeff, and today we're talking to Aston alumna Sue Nofke.
Sue graduated from Aston in 1989 with a degree in business and biochemistry, having first had a taste of the world of investment in her placement year, or sandwich year as they were called back in the day. Schroders is the global asset management company responsible for a £750.6 billion portfolio. She started off as an assistant at the UK Equity Research Department during the placement year, rejoined the company upon graduation, and is still there today. Currently, she heads up the UK Equities division, overseeing £6 billion of assets. And alongside her work, Sue also has extensive media experience, often being called upon to share her knowledge on TV, radio, podcasts, and panel events. Sue, it is an absolute pleasure to have you with us today. Welcome.
Thank you very much for having me.
I'm going to kick off with the very first question, and this is mostly really a question for me because I'm an absolute goof about the world of finance. So I'm going to ask a very broad question, which I'm sure it has most of our listeners groaning because they already know it. But head of equities, head of UK equities at Schroders, what does all of that mean?
It means that I do two things. I wear two hats. I have a head of role, and that has the public-facing side. So that's talking about the UK equity market, advocating for that, explaining why it's important. The other aspect is to manage people within that. So I have a community of 15 investors that I'm responsible for, and I have 7 direct reports as well. So I'm the line manager. But equally importantly, I'm still an investor. And you said I'm in charge of portfolios for clients that total £6 billion. So that brings a lot of responsibility with that money. And I have an investment process. I work with colleagues, and it means that we are day to day investing in the stock market to produce competitive returns for long-term asset portfolios. And that can be people's pension funds, typically if they're with a company scheme or a local authority. It might be for high net worth individuals as well. Anything that you put in your ISA savings for the longer term, that's the sort of thing that I do. So when you hear on the radio or see in a newspaper what the index level is, that's my bread and butter. This is what I have as my benchmark to judge whether I'm doing well or badly.
It's an excellent answer. You very generously perhaps overestimated my intelligence and knowledge a little bit, so I'm going to drill down even further. And I will clarify for all listeners by saying I am not a graduate of Aston University. What's an equity?
An equity is a share in a company. So these are publicly quoted equities as opposed to private companies. So the big ones that you will have heard of in the UK equity market would be oil company Shell, which is a multinational company. And it's financed by equities, a share in the prospects of that business and its assets, as well as debt. Now, I'm on the equity side. So what I'm looking for is a share in the growth and the cash generation of that business, typically through the share price, but also in dividends, and increasingly in today's world, share buybacks as well. So distribution of capital, provision of capital, getting returns on that capital is what I'm about.
That's a lot better. I'm now following, I think. I don't know if we'll leave that in, actually, because I'm sure most people will probably have followed it already. Your journey in that world started quite a while ago at the same company you're at now. From your position fairly high up, looking down as a manager, do you think it's becoming less common for people to spend such a full career at one place, or maybe particularly in finance it's not? Is that something that people aren't doing as much anymore, do you think?
Absolutely, it is. All the statistics say that people will have lots of different jobs in their career lifespan. And so I am a bit unusual. What I would say in my profession, there are a number of people who've been at it for a long time. It is a skill set that gets better with experience. And you build that experience and you keep on learning over not just years, but decades. And so if you look at a number of investors, both in the UK and across the pond in the United States, there are many people that continue their investment careers for multiple decades. And if you think about Warren Buffett, probably one of the world's best known investors, he's in his 90s. These are known aspects. If I look around my colleagues, both at my current firm and within the marketplace, there are many who've been at it for 3 decades or so. And I just said goodbye to one of my long-standing colleagues last Thursday at his retirement due, and we've worked together for more than 30 years. Some of my junior colleagues have also put in quite a long-standing stint of a decade or close to a decade. And when I think about the reasons for that, it's about finding yourself in a comfortable position where you feel as though you're continuing to learn and stretch, but you're in the right industry. So the fit is good and you can continue to develop as an investor, self-development, you can see a career pathway. And working with those like-minded people is what tends to keep people in situ. And if I think for myself why I've spent this amount of time in my career and at one place, it's about probably three things. That I was able to have autonomy in my decision making. So there hasn't been an awful lot of management change and prodding and saying you've got to do it this way, and me pushing back, no, I want to do it the other way. The firm that I joined has been part family owned. So we've had a lot of stability. There hasn't been a lot of takeovers and new people wanting to try new ways of doing things. So again, that's given stability as well. And then the other aspect is that it's given me lots of opportunities to develop myself. So I've carried on learning as an investor, but my role has evolved. So I talked a little bit about wearing my management hat, and you talked about doing some media aspects. And so I feel as though I've grown, my role has grown and blossomed, really, and that's kept me interested and fulfilled.
So thank you for that. So just from my point of view, I've always seen the fund management industry to be quite male dominated. So I'd love to find out what your views are of working in that industry as a woman. And have you noticed kind of any shifts in the last few decades or in recent times?
It's a great question, Katrina. As an investor, it is still very male dominated. So there are various statistics out, and they sadly haven't really changed in all my time working in fund management. Typically, for every 8 people, 7 will be men
Mm.
and 1 will be woman. And that is pretty much unchanged. And it's pretty consistent globally as well. So whether you look in the United States,
Oh,
across
wow.
Europe, in Asia, it's slightly different. And we can come on to discuss some of the reasons for that. If you look at the fund management industry, so there are lots of different roles in fund management and investment that don't involve being an investor. You might be on the client side, you might be involved in marketing or compliance or risk control. And those roles are probably split 1/3 women and 2/3 men. And that goes all the way up to the senior level. Doesn't mean to say that there aren't good female investors. I have a number of colleagues, there just aren't enough of them. And I think it's just that the media perception, and that perpetuates down into people's career choices, what subjects they choose, what they're interested in, are put off by lack of role models. And in fact, I was talking to my 15, nearly 16-year-old daughter yesterday as she was going to get some braces fitted at the orthodontist and said, Emma, would you think about a career in an industry where only 1 in 8 of your colleagues were women? And she said, no, Mum, I wouldn't do that. And I think this is the problem. It's a bit chicken and egg. Until we can get more visibility, really explain what the job involves, the nitty gritty, working as a team, being able to debate your ideas and your investment thesis in a very mature way without getting over emotional, and get away from the media reels, which always show people standing up, shouting into telephones, slamming the desk. It's not like that at all. But this is the perception. And so we don't get as many people applying. We get some good people. We retain some leave for other opportunities, some leave for motherhood reasons, some come back again. But there just aren't enough.
And how have you found that? What was your experience?
I think my experience has been quite typical. The thing that was different was my Aston placement year, the sandwich course that I did, in that I got an insight to the work, to the culture that was very different to the perceptions. And I knew that I could only do it for a year, and then I'd be back to complete my university studies. And that made me more curious to experiment than perhaps if I'd had to make a career choice and say, this is absolutely what I'm going to do. So it provided an openness and a curiosity to be bolder than I might otherwise have done. And then, having had that experience, understood the culture and the kind of work and the sort of colleagues that I would be working with, I had the confidence to reapply and choose that as my career option.
These are such good answers. You've actually, in the space of that, you've pre-answered my next two questions. Guys, I was going to ask that image that you mentioned being conjured up of people standing up and screaming into telephones and waving papers at each other and collapsing on the floor sobbing. That's far removed. Is it that never happens, or is that a different part of the industry people are thinking of, or is it just the version that always looks good if you want it in a drama, so that's what people go for?
Definitely the latter. I think if you had cameras here on a day-to-day basis, people would definitely not be tuning in to that. There are instances. So I'll give you one, for example, where I think the clip is still used when the BBC want to have an example of market chaos. And that was the morning of the Brexit vote. So back in June 2016. And we had the BBC in because they wanted to get the market reaction, and I was teed up to provide a comment. And so I came in super early and was greeted by our new chief executive, Simon Jack from the BBC, and looked like it was going to be quite a chaotic morning, and indeed it was. And so they did film me and my dealing desk in quite a high pressured environment because markets had not been positioned for the outcome of the vote, saying yes to Brexit. And so currency markets in particular were quite volatile, as well as share prices moving all over the place. But that is quite an atypical event. On a normal day, people are quite studious. They're spending their time reading documents online or still on bits of paper. They're preparing to have interactions with company managements, whether again that is online, in the office, or going out to physically see their sites and their operations. And we talk a lot across the desk. So we like to be together because that's the way you learn. COVID was clearly an exception to that. But we'll do quite a lot of talking about what it is that we have learnt. Have you seen this? What do you think of that? And so there's quite a lot of information to assimilate. And probably the greatest challenge of my day job is knowing which information to focus on and what to ignore, because there is just so much.
Have you developed your own internal method of filtering and working through information? Or was it something you discovered you already had when you started, or is it something you've learned along the way?
I've definitely learned a lot along the way. Probably the science background, although I haven't used my biochemistry per se, I've used my science-based skills and methodology to be focused on what we call fundamentals, so the data, to be organized, to be analytical. And that is very helpful in doing the job. Being organized and keeping track of what information or what ideas are still current but unformed. So I create portfolios of roughly 40 to 50 individual holdings. So I have to know those companies really well and the reasons why I hold them. There's probably about 15 or 20 other companies that I'm contemplating that are not fully formed ideas. Otherwise, they would be in or out of the portfolio. So they're work in progress, and I need to keep track of those ideas. And so I'm filtering for those and trying to bat away other things. But you have to have antenna, and you have to pick up and get excited by things, as well as not get distracted by things. So it's a little bit, I can't quite visualize what animal it is, but if you think about something where you're picking up senses and following those senses, gut feel would be another way of describing it. So, what's going on geopolitically? What's going on with interest rates? What's going on in currency markets? All of these things have an impact, and I have to reprioritize intraday and my week. One of the things that keeps me really fresh is that I can look at my calendar the night before and think, this is what I'm going to be doing today. And I come in and read the news items and have to reprioritize what it is I'm going to do. And that's really still exciting. And to be able to say that 34 years after starting is great.
Jeff mentioned earlier that Schroders is responsible for billions of pounds of assets. And obviously, yourself will probably have to manage quite a few huge amounts of money. Do you feel the pressure? Do you find it quite pressurizing having to manage quite large budgets and money?
It is something that feels like a proper responsibility. There are a lot of noughts on £6 billion. And where I feel that responsibility is going out and connecting with my clients. So sitting across the table or doing podcasts where there's interactivity, webinars, that type of thing, having to explain what I've done with that money and whether it's worked out well, which is always a nice feeling, or not worked out so well, which is never a nice feeling. But having to be honest, having to explain the rationale behind those decisions, trying to retain confidence in me and my team's ability to execute those responsibilities is really significant. The other responsibility I have and feel is to have good engagements with the companies in which we invest. We have to take decisions on takeover. We have to make decisions on approving
Mhm.
remuneration reports. We have to decide whether we support shareholder resolutions about climate change. These are really big responsibilities that have impacts on numbers of people. So, from a client perspective, it's how much
Yeah.
money does the savings scheme provide for people's pensions or long-term savings. In terms of companies, it's supporting investment in all the things they want to do. That brings jobs, or giving the go-ahead for
Mhm.
climate proposals, which should reduce carbon, perhaps take money away from other parts of the business, and look quite far into the future. So, yes, there is that responsibility, but that's quite motivating too, because it's real.
Yeah. Do you think that it's something that you actually get used to, or do you still find quite challenging?
We deal less with trying to visualize the pound notes and more with the proportions of the portfolio that are allocated to certain sectors or industries or particular companies. But at the end of the day, it is real money. And if you make an error, then it's real money. But the clients have to be compensated if it's a negative and comes out of our firm's P&L. We're in a regulated business, so we have to fully comply with all the regulations and have to do training. There are lots of different aspects to that. So you have to be aware of all those wider responsibilities, really.
Thank you for that. And I wanted to ask you something else as well, because you've mentioned quite a few times that even after 34 years, you still actually enjoy working in this industry. What is it about this industry that you love the most? What part of the job is something that you actually really look forward to?
The things that I really enjoy are around developing people, delivering for clients. I think there are a lot of values to the job. I think it is an important job
Mhm.
about making sure that we allocate capital to the right types of companies that can invest and deliver profits and provide jobs and prosperity to their local communities and to the economy. So those would be the elements that I enjoy. And my job is really easy to measure. You can measure over any time period, intraday, day by day, week by week, month, years. So it's pretty obvious whether I'm getting things right or getting things wrong. And when it's going right, it feels great.
Was there ever a possibility of a career in biochemistry?
No, I knew quite early on that I was not suited to staying in a lab doing that type of research. I think when I started at Aston, that was part of what I thought I might end up doing was research and then maybe into more management role within a biopharma type environment. But my placement year really opened my eyes to a different set of possibilities. And the kind of environment and market experience that I had within 6 weeks of starting, there was the stock market crash of 1987, where markets fell 22% in 2 days. And that was very dramatic. And yet, by the end of the year, they'd recovered those losses. So it was a super exciting time. I realized that there was a lot of meritocracy, and I really liked that. And probably that's not the impression people have, that it's all about your connections. I had no connections to the city, but actually, because your work is easy to assess whether you're doing a good job or a bad job, it is quite meritocratic. And then you have to be able to work as part of a team. That's quite normal in any work environment. But yeah.
And if we've got any alumni or maybe current students listening and they're suddenly feeling inspired to get into this kind of area, to go into fund management, top advice, top starting pack advice from you?
I think I would advise them to follow markets, follow some companies, think about what are the reasons they like this particular market or company. So think about what we would call an investment thesis, the SWOT analysis, the strengths and weaknesses, the opportunities and threats. If people are interested in thinking about a career as a portfolio manager, create a paper portfolio. It can be 10 stocks, 20 stocks, wherever. Monitor that. And don't be afraid of facing into what you've got wrong. I think I learn more from the things I get wrong than the things I get right, because you don't want to go through that again. So try to see, was it an obvious mistake, or was it just bad luck and timing? Was it entirely predictable, or was it something really left field? And try to think through how you feel about that. Is that something that you find motivating, or is it just too stressful and you don't want to go there? Learn more about yourself as well as learning more about the industry. And there's a lot on the industry that you can pick up on the internet. You can read lots of books that are written by some great investors. The Economist is always a good read. Those would be my kind of top tips.
Now, before we let you go, we've got 3 quick-fire questions we ask all of our guests. So, I'll start them off. What's the most valuable lesson you've learned throughout your career?
Spotting an opportunity. And that can be an opportunity in the stock market for investing in, but as much as that, it is a personal opportunity. Be prepared to seize an opportunity that you think is right for you, or even, dare I say it, try something that you're not quite sure about, but just try it. You never know. Might be for you.
And what's next for you, Sue?
I think it's more of the same, as well as developing my team around me to really stretch them and give them more opportunities.
And where can people find you if they'd like to connect or find out more?
I do have a LinkedIn presence, so you can find me on LinkedIn under Sue Nofke at Schroders. And I post some articles. I comment and like other people's articles. Come on in.
Sue, thank you so much for joining us today. It's been really fascinating to hear about your industry and your experiences. We really appreciate you taking the time to talk with us today. So thank you.
Pleasure.